Thank you for taking time to watch this video on the changes that are being introduced into the Pegasus Payroll solutions for completion of the 2016-17 payroll year end and for the setup required to start running the payroll in the 2017-18 tax year. Hello everybody, my name is Steve Power and I'm a product specialist here at Pegasus Software. What is required to complete the 2016-17 year end? I will give you a step-by-step guide to complete the 2016-17 year end. I'll show you how to use RTI to send the end of year submissions, and I'll also discuss any of the changes that are in place prior to the ending of the current tax year. What are the payroll changes for the 2017-18 tax year? I will discuss the legislative changes, therefore the changes that we have made to the software to accommodate this new legislation. We'll also look at starting the first payroll in the 2017-18 tax year, and finally we'll look at the new functionality that has been added into Opera 3. I will be using Opera 3 to run through this end of year process, but what I'm showing you here is equally applicable to our Opera 2 customers. If there are areas that only work in Opera 3, then I will explicitly point these out to you. Here are the version numbers of the software. Opera 2 needs to be on version 7.60, Opera 3 needs to be version 2.40, and Capital Gold needs to be version 4.03. The Pegasus Online Filing Manager also needs to be upgraded, and that needs to be upgraded to version 3.70. When should you apply the upgrade? Pegasus will have shipped out customer copies of the Payroll Upgrade CD to all of our partners in early February. The software can be installed in any pay period before the end of the 2016-17 tax year. We recommend, however, that you install the software as soon as you receive it from your partner. Once installed, your software is in place, ready to run the end-of-year procedures, submit the final FPS for the 2016-17 tax year, submit the final EPS for the 2016-17 tax year, and then ready to start processing the first payroll in the new tax year of 2017-18. The last point you should install the upgrade is before you start running the final payroll in the current tax year. This is because you'll need to run the payroll year-end processes and the year-end reports, and you must have the software installed to do that. But this is very late to find out if there's a problem. What if the CD is faulty? What if the activation key is not correct? So our recommendation is that you aim to carry out the upgrade as early as possible. To help you understand how to run the end of year, start the new tax year, and what are the changes in the new tax year, then we have produced two documents to guide you through this. The Legislation and Product Changes Guide. This is a guide to help you understand the legislative changes and other changes that affects this year's payroll upgrade. This includes information to help you understand the changes we have made within Opera and the Online Filing Manager to support the legislative changes. There is also a checklist guide, a guide to help you understand the steps to upgrade Opera, upgrade the Online Filing Manager, complete the year end, send the final RTI submissions through to HMRC, and to start the 2017-18 tax year. Of course, many of our customers will want their partners to help them through the upgrade process and running the year end. If you're going to get help from your partner to run the year end, then discuss this with them earlier rather than later, because it's a very busy time of the year for them. Okay, what are the changes we've made for completing the 2016-17 year end? The P60s are updated for the 2016-17 year end. Under the end of year special reports, there is an option called P60 end of year returns. This option allows for the production of the printed P60s that are given to your employees. If you choose to print the P60s, then select the printer option and select either the HMRC version or the Pegasus version. These printouts can be run selectively for a department range or for an employee range. On the left hand side there is the HMRC single sheet P60. On the right hand side are the Pegasus Business Forms. The Pegasus Business Forms are a two-part return that includes the P60 end of year certificate that is sealed by the heat of the printer. You simply fold over and seal it, and it also has a file copy. There's also a second version, which is a peel and seal version. This means that it can be printed, checked later, and then sealed by removing the strips and folding it over. If you want the Pegasus Business Forms version, then you can see the web address at the bottom of that screen. If you require the HMRC version, then go through to the HMRC stationary ordering line. And as you can see here, this is last year's version, but you can see this is the one that you need to order, the P60 single sheet shortened version. There isn't a file copy, so why not order double the amount? The layout has changed as well from last year, with the removal of the upper accrual point column in the NI contributions. On the HMRC site, you'll also need to fill in this form here. So this is all part of the ordering process. Remember as well that you need to order these in a timely manner, and also remember that they must be given to your employees before the 31st of May 2017. If you have Opera 3, you have two other options. You can use the email P60 option. This allows you to email the P60s to your employees. The P60 is encrypted so that only that employee can see their emailed P60. This functionality also allows employees to have their payslips emailed to them. This comes free of charge in Opera 3. There's also another option that allows P60s to be published to the web. This allows the employee to look at their P60s online using devices such as iPads, laptops. Again, it is possible to publish payslips to the web as well. This functionality is known as Payroll Self-Service, and again is available to Opera 3 customers. If you want more information on these options, then go to the Pegasus website or ask your Pegasus partner. So, what is the process to run the end of year? Well, belt and braces approach, take a backup of your Opera 2 or your Opera 3 system. Upgrade Opera 2 to version 760 or upgrade Opera 3 to version 240. Remember, you should be installing the software prior to running the last payroll period in the current tax year, but preferably before that date. And obviously when you install new software, you need to run and update data structures. In previous years, the method of updating the income tax and national insurance was to copy them in from the demonstration company. A couple of years ago, we enhanced the UDS, so this can happen as part of the UDS. If we go and have a look at the PAYE-NI tables, we see that Table 1 is effective from the 6th of the 4th, 2015. In other words, it's the previous tax year. And if you look at Table 2, Table 2 is effective from the 6th of the 4th, 2016. In other words, this is the tables for the current tax year. That's absolutely fine at the moment, but when we upgrade to the new tax year, we need that to be 2017 tax tables. So how can we update this? As I said earlier, we could go through and we could run the update data structures. And if we take the option to update data structures, we select a particular company. And therefore we can say whether we want to apply these tables. In other words, Table 1 becomes effective from the 6th of the 4th, 16, and Table 2 becomes effective from the 6th of the 4th, 17. In other words, have the current year and the new tax year available to it. Alternatively, we could go into the payroll, and under the utilities option, we have an option here to copy in the statutory rates. And if I take this option here, it says the system defaults will be Table 1, current tax year, Table 2, the new tax year. Or alternatively, I could copy them from any other company. I could, for instance, copy them in from Company Z. Let's take this particular option here to do this. It just confirms Table 1 was effective for the current tax year, Table 2 will become effective in the new tax year. If we now go and have a look at the tax tables, we can now see Table 1 is effective for the 16-17 tax years, and Table 2 is effective for the 17-18 tax year. However, remember, we have to run a UDS when we install the new software, so why not update the tables at that particular point in time? Next, upgrade the online filing manager to version 370. Ensure that you've upgraded Opera before you upgrade the online filing manager, and make sure that you do upgrade the online filing manager, otherwise you will not be able to submit your end of year RTI submissions. Then you just run the normal payroll. So you will complete the normal payroll processing by adding in your timesheets, confirming the temporary and the permanent payments, confirm any deductions, run the payroll calculation for the payroll groups, and then go through and print out your pay slips, as well as the normal summary reports such as your this period summary and your to date summary reports. Also go through and check the P32 processing to make sure that the funding and the payments are all correct. However, do not run the update option. That completes the normal payroll run for the last payroll in the 2016-17 tax year. Now we need to start the process of completing the 2016-17 year end. So, what is the process to run the end of year? The first thing you need to do is you need to go into the end of year special reports and you need to print out the P60 end of year returns. Let's show this in the software itself. So if I go into the end of year special reports, take this option here to print out the P60 end of year returns. Select the payroll groups and select which employee ranges or which department ranges you're selecting. And in my case, I'm going to print out the printed version and also the web versions. And I'll print these through to screen. So here we can see the P60s printed out for the web versions, and here are those P60s. Once I've printed those out, I can therefore print out the printed versions that are on pre-printed stationery, and here are those P60s that come on that pre-printed stationery. Next, I can print out the P35 substitute, and again this is part of the end of year reports. So if I hop back into Opera, end of year special reports, print out the P35 substitute. It just warns you, you don't need to send this to HMRC. So this report is for your own records. And here we go. It shows us the overall totals for the national insurance and the tax that has been deducted. Next, we can print out the payment and deductions list. And again, within the software, end of year special reports, payment and deductions list. This allows me to go through and select the employee range. It then also allows me to select which of the payments and which of the deduction types you're looking for. So in this example, I'm going to print it out for the basic pay. And I'll send this report through to screen. And there are all the payments through to those employees for the basic pay in this particular period, giving me the overall totals. There is a new version of the payment and deductions list called Advanced Payment and Deductions. This is a new version of the payments report that we ran a moment ago, and if we run this again from within the software, we can see this allows me to select the employee range, it allows me to select the department range, or it allows me to select the gender. It allows me to do it for the current period, or I can do it for a range of periods. So in this particular example, I'm going to select it from period 1 to period 12 in the 2016-17 tax year. It also allows you to select multiple payment types and multiple deduction types. So in this case, I'll select basic pay, overtime pay, expenses and commission, for instance. If I take this option to run this report and print it through to screen, I can see that this is printing. The first page is for the basic pay. It's for the period 1 of the tax year 2016-17. So I can see the totals for period 1. If I go on to the next page, I can see the totals of the overtime pay for period 1 in the current tax year, and so on and so on and so on. This is a multi-period, multiple payment and deductions report that really improves on that old payment and deductions list, because that only listed for the current period itself. Once I've printed those reports, I can then go through and I can print any other reports that I want from within Opera for this final period in the current tax year. Now return back to the normal processing of your payroll. If your payroll is linked to the nominal ledger, run the nominal ledger analysis option to create the nominal ledger transfer file if you're not using real time. If the payroll is linked to the cash book, run the cash book transfer option to create the nominal ledger transfer file. And if the employees are paid by BACS, run the payments report and create the BACS payment file. Now we need to send the RTI submissions through to HMRC before we complete the end of year. The first RTI submission is going to be the full payment submission, the FPS. So we need to go through and create the final FPS and submit this through to HMRC, the final FPS for the 2016-17 tax year. If I hop back into the software, as you normally would do, go into the RTI submissions, select the full payment submission, and create the file in the normal way. I'll print out the audit trail report through to screen. I'm happy with that audit trail, in which case I will therefore create the FPS file and I'll submit it through to HMRC as I normally would using the online filing manager. So log into the government gateway and submit. This is no different to the way that you would normally submit the system through. Remember that HMRC have a tendency to take down their online systems at the end of year so they can update those systems. If you log on to the government website www.gov.uk and search for the Service Issues PAYE, if you take this option, it will then give you a list of what matches is, and what you're actually looking for there is the pay as you earn, service availability and issues. If you select that option, then it tells you here what's the service availability. In my example here, full service is available. But what it also tells you is there any planned downtime? If so, then it wouldn't be a good time to plan to send your submission when the HMRC are tending to have planned downtime. So it's useful to get this sort of information from the HMRC site to plan when you're going to send these submissions through. The second RTI submission we need to send to HMRC before we complete the end of year is the final employer payment summary. Once we sent the FPS for the final period of 2016-17 tax year, we then need to send this final EPS and submit it through to HMRC. So again, I'm going to hop into the software and create the EPS. Select the option for the employment payment summary. Create the report. This time, however, it is the final EPS of the year. Which year? The 2016-17 tax year. It just confirms, have you sent the FPS for the 16-17 tax year? Yes, we've just submitted that. The recoverable values will have been automatically populated from the values for the current tax year. I'm happy with these, so we will take this option to submit. I will print the audit trail report through to screen. I'm happy with those figures. I'll create the file and then I'll use the online filing manager to submit this EPS. So log on to the government gateway, confirm the password and submit. We now need to run the payroll update routine to close the final pay period of 2016-17. So we return to the normal processing of the payroll to run the payroll update. Again, let's do that within the software. We take the option to run the payroll update. Confirm that all the actions have been performed. Yes, they have. And now we've got the normal option to go through and clear down the pensions to say that we've paid those particular pension providers. Has the FPS been run? Yes, it has. Would I like to continue? Yes, I would. This has now completed the final payroll of the 2016-17 tax year. To complete the end of year, we need to run the end of year clear down. So again, within the software, if we go to the end of year special reports, we have the option here for the end of year clear down. Are you sure we wish to continue? Yes, we do. The current tax year will increase from 1617 to 1718. That's exactly what I want it to do. And then it gives you the option. Do you want to clear down the cumulatives for the payments? I'm going to select all. What about the deductions? Yeah, I'm going to select all of those as well. However, you may not want all of the cumulatives to be set back to zero. So, for instance, if I don't want the loan repayment, then I can selectively go through and turn these options on or off. In my example here, I'm selecting to reset them all to zero. Clear down complete. It then just says that you should go through and you should do the final checks to make sure that this has operated as expected. So what are these final checks that we need to do? Well, we need to just make sure the payroll is now in the 2017-18 tax year. So we should just do a few checks to make sure that it is correct. Let's have a look at the set options to make sure that the current tax year has now been incremented to 2017-18. So again, within the software, under the set options, are we now in the 17-18 tax year? Yes, we are. Check that the calendar is also set to 17-18. And again, we can see the tax year now is 17-18. And finally, just check that the PAYE NI tables are also in the correct tax year. I can see table 1 is the previous tax year, 2016-17. Table 2 is the current tax year, 2017-18. And a couple of final other checks. Are you subject to small employers relief? If the total NI Class 1 contributions are less than 45,000 in the previous tax year, then you can reclaim statutory maternity pay, etc. at the rate of 103% compared with the standard rate of 92%. If this is true, then within the set options, on the options page 2, we can turn this flag on here, entitled to small employers relief. Tick that flag if that's the case for you guys. And I guess the final thing we need to do is just to make sure that the employee tax codes are correct. So if we're notified to change those, then go through and change that. Remember, the sequence of events is clearly detailed in the checklist guide. If you're in any doubt, then please contact your partner for help and advice. This now completes the end of year. We are now ready to run the first payroll in the 2017-18 tax year. What if you made a mistake with your submissions to HMRC but are now transacting in the new tax year? These cannot be corrected directly from within Opera itself. However, you can use the HMRC basic PAYE tools to produce and submit an earlier year update. This allows you to manually adjust your figures held on the HMRC site, so yes, they can be adjusted. So what are the actual changes for the 2017-18 tax year? The basic and higher rates have changed for the 2017-18 tax year. The bandwidths are, the 20% is from 0 to 33,500. That's up from 32,000, which is an increase of £1,500. The 40% rate is from 33,501 to 150,000, and the 45% rate is above 150,000. In other words, that remains exactly the same. These are the tax rates for the rest of the UK, so are for England, Northern Ireland and Wales. The Scotland Act 2016 provides the Scottish Parliament with the powers to set the income tax rates and the bands that will apply to Scottish taxpayers. In December 2016, the Scottish Finance Secretary delivered a draft budget where the bandwidths in Scotland are different to those in the rest of the UK. So the basic and higher rates in Scotland have changed in the 2017-18 tax year. The bandwidths are for the 20% 0 to 31,930. So that is down by £70 compared to the year before. The 40% rate is from 31,931 to 150,000, and the 45% rate remains the same at 150,000 and above. Remember, taxpayers in Scotland will have a tax code with an S prefix. So for example, the 1100L tax code will become S1100L. If we look at the software, we now have the table here for Scottish tax. And if you look at table 2 for the 17-18 tax year, we can see that the bandwidths are those that I described just a moment ago. Also, if we look at an employee, we don't go through and change the tax code to have the S prefix. We simply turn this flag on here, Scottish taxpayer. In the FPS, the S prefix will automatically be added to that tax code. Personal allowances have risen by £500. They've gone from 11,000 to 11,500. I'm also aware that a range of other allowances that will have changed as well. So for instance, the blind person's allowance has gone up by £30 to 2,320. There is a general uplift of the tax codes with the L suffix. The uplift is 50, so the 1100L goes to 1150L. The emergency tax code changes from 1100L to 1150L. Thresholds are the points at which national insurance is calculated, and there are two thresholds. There's the primary threshold for employees and the secondary threshold for employers. Here are the changes to the bandwidths. Lower earnings limit has gone up by £1 to £113. Secondary threshold, the point at which the employer pays national insurance, has gone up by £1 to £157. Primary threshold, the point at which the employee pays national insurance, has gone up by £2 to £157, and the upper earnings limit has gone up by £39 to £866. Note that the primary threshold is now the same as the secondary threshold. There are no changes to the percentages for the calculation of NIC for the standard NI codes, i.e. the standard A rate category NI code. So below the lower earnings limit of £113, the rate is 0. Between the lower earnings limit and the primary threshold, that is 0. Between the primary threshold and the upper earnings limit, that's 12%, and above the upper earnings limit, that is 2%. From an employer's perspective, again, there are no changes to the percentage for the calculation of national insurance. So below this secondary threshold, it is 0. Above the secondary threshold of £157, it is 13.8%. Remember, 2 years ago, there was the introduction of the NI category code letters of M and Z that identified employees aged under 21. This NI category code was linked to something called the upper secondary threshold, UST. Last year, there was an introduction of another NI category code letter of H that identified employees that were apprentices aged under 25. This NI category code was linked to a threshold called the Apprentices Upper Secondary Threshold, AUST. The UST and the AUST are aligned to the upper earnings limit in the 2017-18 tax year, which is set at $866 per week. Employers' NI contributions for these employees are charged at 0 rate below the upper earnings limit and are charged at the standard 13.8% for earnings above the upper earnings limit. The way that the government funds apprenticeships in England is changing. Some employers will be required to pay a new apprenticeship levy, and the funding for apprenticeships will also be changing. The apprenticeship levy applies to all UK employers with a Class 1 secondary NIC liability and with a pay bill over £3 million a year. The levy rate will be charged at 0.5% of their total pay bill. However, the government is introducing a levy allowance of £15,000 per tax year or £1,250 per tax month. This means the total amount that needs to be paid will be 0.5% of the pay bill minus this levy allowance of £15,000. Companies with multiple PAYE schemes must share this allowance across their schemes. The details of the levy will be included in the RTI Employer Payment Summary, i.e. the EPS submission, if the levy has been due at any time during the tax year. The levy should be paid in full for the tax month and included in the payment of tax, NI and student loans as per the standard HMRC guidance. Remember, the monthly levy allowance of £1,250 is deducted from the apprenticeship levy and only the balance has to be paid in full. In other words, the levy is calculated on a monthly cumulative basis and paid for in each tax month. Any unused allowance will be carried forward to the next month. If there is an unusual pay bill spike in a month, this could mean that the levy is paid, even though the eventual annual pay bill is less than £3 million. In this scenario, then the overpayment is reclaimed in future tax months. So what are the changes we've added to the software to cater for the apprenticeship levy? Firstly, the value of the annual allowance and the levy percentage are stored in the PAYE NI tables. If you select the Employer's NI tab for the 17-18 tax year, i.e. Table 2, then you will see these two figures. These are updated automatically when you invoke the standard update of these tables within the payroll upgrade. When you run the payroll calculation and open up the payroll P32 processing form, from the action button you'll see that there's a new option called the apprenticeship levy. If you select this option, then it displays the results of the payroll calculation. Here we can see that it displays the calculated levy earnings for the month and the levy earnings year to date. In my example, month 1, the calculation shows that the levy earnings for month 1 is £59,500. Therefore, the levy earnings year to date is also £59,500. The levy year to date is £297, i.e. 0.5% of £59,500. The allowance year to date in month 1 is £1,250 and therefore the levy due in month 1 is 0 because the levy is less than the allowance. So the final column shows what levy is due to be paid to HMRC this month, and again in my example this is 0. And as you go through the year, these figures will then build up cumulatively and the value that needs to be paid each month will also be displayed. If you select the payment option from the action button on the P32 processing form, you will then see that there is a new field that shows the value of the apprenticeship levy that is due to be paid across to HMRC. This value is added to the tax, NI and student loans and gives the total value that is to be paid. Remember as well, this figure is also included in the EPS submission that you will send through to HMRC. Statutory payment rates. Statutory sick pay. The weekly rate for days absence due to sickness rises to £89.35 for employees with average weekly earnings of £113 or more, a rise of 90p. The other statutory rates rise to £140.98 per week, that's a rise of £1.40. From the 6th of April 2017, the annual student loan thresholds are, for Plan 1, the student loan threshold rises by £280 to £17,775. For Plan 2, the student loan threshold remains the same at £21,000. Student loan repayments must be deducted when an employee's earnings reach the relevant student loan threshold. If an employee is repaying a student loan, you will need to ask them which plan type the employee is repaying under. For a new employee, their P45 only states that they are repaying a student loan. It doesn't tell you which plan type is being used, so you'll need to ask them that question. If you get an HMRC student loan repayment SL1 start notice, then this will tell you which plan to use. These student loans are set up within the software. If we go into the employee processing form, off the action button, if we choose the bank details, this is where you can specify student loan plan 1 or student loan plan 2. From October 2012, workplace pensions reform started. By November 2016, more than 7 million workers had been auto-enrolled into workplace pensions. The earning trigger for auto-enrolment remains the same at £10,000 per annum, which is £192 per week or £833 per month. The qualifying earnings lower threshold has risen by £52 to £5,876. the qualifying earnings upper threshold has risen by £2,000 to £45,000. The employment allowance allows the employer to reduce their Class 1 national insurance bill by the value of this allowance. This remains the same as last year at £3,000 in the 2017-18 tax year. I know this isn't a change, but for completeness I've included it in this presentation. The full payment submission, the FPS, in the new tax year can include company car details if the employer wants to payroll this benefit in kind. This includes details of new cars and any changes to existing cars, such as elements that contribute to the value, changes in fuel benefits, and so on. The cash equivalent of the benefit will also need to be added to the payroll. If an employer wishes to introduce this option into their payroll for the 2017-18 tax year, then you need to register online with HMRC before the start of the new tax year. So what are the changes we've added to the software to cater for the payrolling of company car benefits? Firstly, on the payroll processing form, off the action button, you will see that there's a new option of payrolling benefits, company car benefits. If you select this option, you can enter the details of the car, including car registration, CO2 emissions, calculated price, and the cash equivalent. If free fuel is provided, then it is possible to include the cash equivalent of that free fuel. When this information is saved, it will then appear in the table below. This means that you can enter multiple car details against an employee if that's applicable. These details can be recorded before the start of the new tax year, but will only be included in the FPS in the new tax year. Remember, you will need to set up a payment profile for this company car benefit and set up the payment profile type to be that of B for benefit in kind. This payment profile will then be assigned to those employees that have company cars. This means that this will appear on their payslip and tax will be deducted against this payment each time the payroll is run, i.e. the tax on the benefit in kind is effectively in real time. This allows you to payroll tax on benefits in kind. Alternatively, you can continue to report benefits in kind on the P11D after the end of the tax year as normal. Advanced payments and deductions list. We already covered this earlier in the presentation when we looked at some of the end of year reporting. However, let us have another look at this option in more detail to explain what it can deliver and why this will be particularly important to some of our payroll customers. The existing payment and deductions list allowed for the selection of a single payment or deduction profile and will produce a printed report on that profile detailing the current pay period only. Here is an example of that report. In my example, you can see that the payment profile type that was selected was for basic pay, and you can see that it showed the values for this period and the cumulative total year to date. This is a fairly basic report. Let's hop into the software and let's run the advanced payments and deductions list. So under the end of year special reports, we have the advanced payment and deductions list. We can select different sequences. In this case, I'm going to select the employee and I can specify the employee range. I can choose the gender, male, female or both, and I can choose which period. In this case, I'm actually going to choose period 1 to period 12 in the 2016-17 tax year. I can select which payment types I want. So in this case, I'm going to have basic, overtime expenses and commission. I can also select which deduction types that I want. And let's run this report through to screen. And here we can see that we have for basic pay for the tax year 16-17 for period 1. And again, we can see the value for this period. If we look at the second page, we can see that this is for overtime for 16-17 tax year for period 1. And here's the basic pay for period 2 for the 16-17 tax year. This is a multi-period, multiple payment and deductions report that improves on the old report because that only listed an item for the current period. Okay, let's run this report again. This time, I'm going to select to sequence it by department. Again, I'm going to include both genders and I'm going to include the whole of the year 16-17 from period 1 to period 12. This time, however, I'm just going to select the basic pay. And if I run this report through to screen again, here we can see that it's based on department. So here we go, the basic pay for period 1 in the 16-17 tax year, that's the total for the administration, that's the total for leasing, that's the total for sales. If I go on to the next page, I can see here's the totals for period 2 based on department. Let's run that report a third time. This time, the sequence is going to be by gender. Again, I'm going to select both gender types, and again, I'm going to do it for the whole of the tax year, but I'm only going to select the basic pay. And again, let's run this report through to screen. This time we can see that it's broken the report down into gender. So for the females, here's a subtotal of the females, here's a subtotal of the males for the basic pay 16-17 tax year for period 1. If I go on to the next page, then I'll see the figures for period 2 for the basic pay. Let's run that report one final time. Again, I'm going to do it by gender. I'm going to be selective on the tax year, and I'm only going to choose the basic pay. This time, however, I'm not going to print this report. I'm going to send this report through to Excel. And here's that report created within Excel itself. Notice this is a gender subtotal report in Excel, but notice that it is showing basic, not just the basic information, but it's including a whole host of additional information subtotaled by gender. So this report, this advanced payments and deductions report, allows you to sort the information by employee, by department, by gender. It allows it to be selectable by gender, allows you to specify the period and the year from to, and it allows you to go through and select which payment, which deduction types you want. And the report can be sent to Excel with additional information included. This means that the data can be analysed and categorised further. However, because this report links to Excel, then it is only available to Opera 3. Opera 2 customers cannot benefit from this new reporting functionality. This report allows any payroll customer to now have the ability to analyse their data in many different ways, which can be very useful. Why is this so important? Starting in April 2017, the government require employers with more than 250 employees to gather and publish gender pay gap information annually. First results would need to be published to the corporate website and then sent to the government-sponsored website by April 2018. The rules state that companies will need to report on mean and median gender pay gaps, mean and median gender bonus gaps, and the number of men and women in each quartile of the company's pay distribution. However, it is likely that a company may want to segment their payroll data into areas such as seniority or by job function so that they can identify any pay gaps that might exist in, say, the shop floor, junior and middle management, for example. Also, for companies that have legacy pay structures in different business units, then identifying grades and comparing them on a like-for-like basis could be very challenging. Because the government have not come up with a defined set of reports that can be used by all employers in the UK, and precise requirements are yet still to be clearly defined, then it's not possible for us at Pegasus to produce these reports automatically. Instead, we have redesigned the payment and deductions report into this new advanced payment and deductions option. This will allow employers to extract information from the payroll in a multitude of different ways to help them analyse their own payroll data in order to prepare for the required reports that need to be published. These reports can be sent to Excel so that you can use the power of Excel to produce and analyse the data in the best ways that fit any particular company. So what do you need to do now to set up for the new tax year? Let's just recap on what we discussed earlier. Take a backup. Make sure you've got a backup of your data. Make sure that you've updated the PAYE NI statutory payments tables. And also you need to go through and check that the data is correct. And what we meant by that was to specifically go into the PAYE NI tables and make sure that table 2 is set to the 2017-18 tax year and that these bandwidths themselves are correct. Also, check that the calendar is set for the 2017-18 tax year and that the set options is also set for the 2017-18 tax year. That is showing you that the system is now ready to transact in the next tax year. Final checks. Small employers relief for SMP, SPP, SAP. The recovery and compensation rates for the small employers relief and the classification of a small business have not changed. Employers qualify if their total annual Class 1 NIC liability, which includes both the primary, i.e. the employee, and the secondary, i.e. the employer, the total value of that is less than $45,000 in the previous tax year. This allows employers to recover 100% of the statutory payments, SMP, shared parental leave and the like, paid to those employees, plus 3% compensation. If this is the case, then within these set options, under options page 2, tick this flag here, entitled to small employers relief. Employers who do not qualify for small employers relief can recover 92% of the statutory payments paid to their employees. You also need to go through and do the final checks for your employees. Remember, within the software itself, under the Global Changes option, there's an option to globally change the tax codes. We know, for instance, that the 1100L tax code goes up by £500 to 1150L, in which case it's an increase of 50. We could select this option to uplift all those L tax codes by 50 for all employees, and if I take this option here, it would actually go through and globally update those employees. Remember as well, there might be new tax codes for some employees. You'll be notified on the P6 form from HMRC, so apply those to those individuals. Also as well, update employees that are based, that actually reside in Scotland. So go through and mark them as Scottish residents. And also review the student loans to make sure that you have the correct plans for students that are paying student loan deductions. You're now ready to go through and run the first payroll in the 2017-18 tax year. And finally, let me take you to an area that provides useful information. If you go onto the Pegasus website, pegasus.co.uk, and select the Media Centre, Product Demos, you'll find that there's a range of useful demonstration videos to help provide you with useful information. From a payroll perspective, we have videos on introducing auto-enrolment and implementing auto-enrolment. This goes through how you can turn on auto-enrolment within Opera and then auto-enroll your workers into workplace pensions. Salary sacrifice. Many of our customers will want to implement salary sacrifice as part of auto-enrolment. In Opera 3, it is possible to operate salary sacrifice against pension contributions, potentially reducing the cost to both employers and employees. Payroll self-service allows employees to remotely access their personal data, payslips, pension contributions, P60s and the like. Also, there's an ability to enter remote timesheets. Email, payslips and P60s. The ability for employees to receive their payslips and P60s via email is particularly popular with both employers and employees. Payroll end of year. Well, of course, you're looking at this payroll end of year video, so you know where to locate that. If you have Opera 2 and use more than just the payroll, then there is a whole range of new functionality that's available to you in Opera 3, such as credit management, debt management, Pegasus Business Cloud, stock take, open, period accounting, landed costs, a whole range of information. So go onto the website and have a look at some of these videos. You might find that there's new functionality that might be useful to your company. And finally, I would like to say thank you for listening to this video. I hope you found the information useful. If you need further information, then please feel free to contact your Pegasus partner. They will be more than happy to help you. Thank you.